I do think there is a strategic value in the U.S. owning a commodity that actually could rise in value, because it does change the way markets eventually see the U.S. deficit. Because if Bitcoin is something that is rising and the U.S. owns 1 million of Bitcoin and they're going to hold it for 20 years, that in some ways could actually offset a lot of the deficit. And Bitcoin is viewed as digital gold by buyers of Bitcoin and people who hold and support the network. Then it makes perfect sense for governments to actually treat that as a commodity. If the U.S. owns 1 million Bitcoin, they would be the largest holder of Bitcoin in the world after Satoshi. That would allow them to exert significant influence on the network. So I think it makes a lot of sense.
As Bitcoin weathers ongoing volatility, dropping sharply amid macroeconomic uncertainty, renowned strategist Tom Lee is sounding the alarm yet again. While many investors are panicking, Lee offers a contrarian view. He believes the current weakness is setting the stage for an explosive rally. According to him, the markets are misreading key indicators, and the Federal Reserve's tightening cycle may be coming to an abrupt end. Lee argues that Wall Street is underestimating the power of technological adoption and demographic shifts, both of which are fueling long-term bullish momentum for Bitcoin. He predicts that not only will Bitcoin recover, but by 2025, we could see a parabolic move driven by institutional capital and a global wave of FOMO. As ETF inflows accelerate and supply remains capped, Lee warns, the next phase will catch most investors off guard, and it's closer than they think. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you, and enjoy the video.
If Bitcoin is something that is rising and the U.S. owns 1 million of Bitcoin and they're going to hold it for 20 years, that in some ways could actually offset a lot of the deficit. Well, there is going to be a break point, because if the economy becomes uncertain and consumers sit on their hands or confidence falls and businesses slow expansion, the economy risks going to stall speed. And nobody wants the economy to go to stall speed, because if you enter a recession, it'll force the administration to unwind everything. Because as you know, when you have a recession, you have to have fiscal expansion, meaning no austerity, spend a lot of money, and it reverses all the things that the administration is trying to accomplish. And similarly, the Fed wants to avoid stall speed, because instead of worrying about full employment and inflation, if employment starts to weaken, the Fed has to go into easy money right away, which means a put, of course, exists at a certain level. I mean, there are going to be distributional consequences of any policy. So I think it makes sense that if Doge wants to reduce federal waste, by necessity, it does mean lower federal employment. The question that we don't know the answer to yet is this necessarily damaging the economy? We know that in general, private sector spending gets crowded out by government spending. In other words, in an economy, government spending essentially competes with private sector. So if you're shrinking the government sector, it is reallocating money to presumably a better return on invested capital. So it should actually be better for GDP. But as you're pointing out, in regions that are affected by Doge cuts, there will be unemployment. It's not that different from globalization in the 80s and 90s, which actually left many states in the US without manufacturing jobs. And I think that Doge is sort of similar. So I don't think in that experience of the 80s and 90s, US growth actually slowed, it actually improved. I think ultimately Doge will hurt some regions, and it's going to probably be good for the economy.
Bitcoin is quickly becoming well known among big institutions, governments, and the media, in addition to regular investors. According to Tom Lee, this expanding adoption is just getting started. He calls it a significant turning point in finance and draws a comparison between the early days of Bitcoin and the current surge in interest, particularly with the introduction of Bitcoin ETFs. According to Lee, this momentum is being fueled by powerful players like BlackRock and other major crypto firms. He predicts that by the end of 2025, there will be over 1 billion active crypto wallets worldwide, a staggering pace of growth that he says will lead to the fastest accumulation of wealth in history. After decades of research, Lee's conclusion is clear. Liquidity drives markets, and crypto is poised to be the top-performing asset class of our time. Now, let's dive back and hear what he has to say.
I think that's going to be the focus. I think there's a 64% probability of a June cut, and it's 75% for July, and only 28% for May. If we get a soft February employment report and jobless claims continue to rise, then the probability of a May cut likely goes to 100%. The ISM manufacturing report for February, which came out today, the employment index component was 47. So you're already below 50. A lot of the regional surveys are already showing CapEx plans are pausing, and employment could even be softening. So it's a consistent picture of uncertainty is creating economy sort of stalling. And if Friday's jobs report, which is for February, is under 100,000 jobs, I think the Fed will see that there has been a sudden change in the momentum of the labor markets, and I think that they would have to react to that. Because again, if the economy gets to stall speed and a recession starts, the Fed has to take emergency measures, which means drastic cuts rather than a cutting cycle. If digital assets become a form of an alternative payment system, and Bitcoin is viewed as digital gold by buyers of Bitcoin and people who hold and support the network, then it makes perfect sense for governments to actually treat that as a commodity that they do want to have some control over. If the U.S. owns 1 million Bitcoin, which could be, what the strategic, we really don't know the composition and how much Bitcoin they'll own, but if they own 1 million Bitcoin, they would be the largest holder of Bitcoin in the world after Satoshi. That would allow them to exert significant influence on the network. So I think it makes a lot of sense if you look at financial instruments and if Bitcoin becomes increasingly viewed as digital gold, that the U.S. should have a strategic reserve of Bitcoin.
Tom Lee's perspective presents a nuanced yet perceptive view of potential future directions for the markets and economy. He draws attention to mounting evidence of the U.S. labor market's deterioration, pointing out that capital spending plans are starting to stall and manufacturing employment is already declining. Lee thinks the Fed will be forced to act swiftly and forcefully if future job data continue to disappoint, particularly if the number of new jobs created drops below 100,000. Regarding cryptocurrencies, Lee sees a time when people would acknowledge digital assets like Bitcoin as strategic financial tools that are comparable to gold rather than just as investment vehicles. He says the United States would become one of the most powerful participants in the cryptocurrency market, second only to Satoshi Nakamoto, if it established a Bitcoin reserve and owned up to 1 million BTC. He contends that doing so would allow the government considerable control over the network and solidify Bitcoin's position as a virtual gold standard in the world economy. According to Lee, how fast the Fed responds, how investors react to changing economic signals, and how digital assets like Bitcoin develop inside the larger financial system will all influence the coming months. Regardless of your focus on markets, the economy, or cryptocurrency, one thing is certain: we are at a turning point, and according to Tom Lee, everything from interest rates to Bitcoin reserves may shift more quickly than anyone anticipates. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.